Okay, and so thanks again. I'm thrilled, and it's really a privilege to welcome you to this panel discussion on unlocking finance for nature-based solutions in Asia. The topic really couldn't be more timely. The Asia-Pacific region is home to some of the world's most mega-diverse countries. The latest report by the Intergovernmental Science Policy Platform on Biodiversity and Ecosystem Services highlighted again that Asia-Pacific is home to 17 of the world's 36 biodiversity hotspots. The region, of course, at the same time supports over 4 billion people, many of whom rely directly or indirectly on biodiversity for their ecosystem services that nature and biodiversity provide. The World Economic Forum estimates that actually as much as 63% of the region's GDP is potentially at risk due to nature loss. And this is a problem since the region faces relentless pressures stemming from rapid urbanization, from deforestation, pollution, and of course, climate change. And these factors together are accelerating biodiversity loss at quite an alarming rate. 60% of the region's grasslands are at risk of degradation, and nearly 25% of endemic species are also under threat. So as the impacts of climate change intensify, the need to integrate ecological health into our economic systems has really never been more urgent. Strategic investments in nature and biodiversity are called for, which could not only mitigate these risks, but also generate substantial economic benefit. So S&P estimates that investing in nature positive business opportunities could potentially generate over $4 trillion by 2030. Addressing these challenges requires a substantial shift in how we all value and finance nature. And by unlocking finance for biodiversity, the Asia-Pacific region can really lead by example here and demonstrate that economic growth and environmental sustainability can really go hand in hand. So with that introduction, I am delighted to welcome 4 fantastic and very knowledgeable speakers to explore this topic in depth today. So we have with us Satya Tripathi, who is the Secretary General of the Global Alliance for a Sustainable Planet. We have Andy Turnbull, Senior Investment Manager for Natural Capital at Federated Hermes. We have Datuk Jeffrey with us, who is the CEO of the Malaysia Forest Fund. And last, Jurgita Balaisaite, who is Vice President, APAC ESG and Climate Research for MSCI. I'll start with an opening question for all of you. And Satya, to get the discussion started, it would be really great if you could give us just an overview of what nature finance means and a little bit more detail on the risks that nature and biodiversity loss pose to ASEAN economies.
Thank you, Laura, and greetings, everyone. It's wonderful to be here today to discuss something which is at the core of everything we will do and experience over the next decade. If we survive this, then possibly the next and the next. And why I say that is because that's central to your question, Laura, is that we have ignored nature for far too long. Everything that humans use for their survival, everything, there are no exceptions to that rule. Everything comes from nature. And we have somehow magically believed that there is no end to that giving, Nature will just keep giving, even if we keep destroying it. And that's now finally coming home to roost. And to give you an example of the ASEAN region itself and the challenge to nature and biodiversity, 2 of the biggest economies in ASEAN, which is Indonesia and Malaysia, draw heavily from oil palm and the economy around it. If you look at latest research, up to 10% of the emissions on land use and land use change has come from palm oil. And as much as it has strengthened these economies and brought a lot of people out of poverty and done amazing things for the economies that have relied on palm oil for their economic growth. But it's time to stop. Stop, not as in stop growing palm oil or oil palms, but stop getting into the forest frontier and destroying it and do nutrient mining to advance oil palm. Because in both these economies that I mentioned, and I have worked extensively on those when I was working in that region as a head of the UN's Red Plus office, UN OCID, if you take the case of Indonesia alone, there are about 7 million hectares of degraded oil palm that you can actually replant, find the resources, and produce at twice or thrice or even 4 times the efficiency as compared to now, because they are degraded, so they actually produce at anywhere between 25 to 40% of the normal efficiency of oil palm. And you could actually revamp the economy and bring back prosperity to these communities without touching a single forest land, a single acre of forest land. So, so the opportunities are right there. We have to see the opportunities for what they do for people, but equally what they do for planet in not damaging the pristine rainforests that are such an amazing heritage of nature in both these countries and many other countries in the region. Talking about Asia Pacific, if you take the case of India, talking about sustainable agriculture, to have agriculture done properly, you need about 2.5% soil organic carbon. In most parts of India now, the soil organic carbon has dropped to 0.4%. You're literally a few crops away from starvation if you don't take these things seriously and try to rehabilitate the land, bring back the ecosystems, focus on ecology and not just economy, because ecology will bring you growth and prosperity for everybody at the bottom of the pyramid, especially talking about the economy. Thank you.
Thank you so much. Maybe shifting a little bit actually to the global investor perspective, Andy. So Federated Hermes, of course, is all about providing sustainable wealth creation. Could you share how your investment approach generates returns while at the same time watching out for the environment over the long term?
Yes, sure. Thanks, Lauren, and good to be here. So Federated Hermes is an active asset manager and has always been at the forefront of responsible investing, as we do have the conviction that responsible investing is the best way to create long-term wealth for investors over the long run. In my role in the Federated Hermes private markets natural capital team, we are seeking to generate long-term attractive financial returns through the preservation and restoration of nature and biodiversity. We currently mainly do this via the UK Nature Impact Strategy by investing directly into real assets like woodland creation and woodland restoration projects, peatland restoration, and other habitat types such as grassland, trying to restore important grasslands as well. We also invest into nature-based supporting infrastructure businesses. And when we package this up and combine it in one portfolio, this offers diversified multi-asset exposure for investors that has revenue streams that are nature-based and exhibit low correlation to traditional strategies. And overall, our approach is science-based and impact-led. So that's very much baked into how we think about and assess our investment opportunities. And we are aiming to provide investors exposure to fast-growing nature-based markets like carbon and biodiversity. But we are also working with traditional revenue streams from natural capital, such as timber, which again, when we combine these just multiple sources of nature-based, some of them newer, some of them older, when we combine these together to generate the financial returns, we can do that whilst enriching the environment by focusing on nature first. So it's not necessarily if we look at a particular site to create a new forest, it isn't timber above all else, or production above all else. That may form part of it, but it's really starting from the base of what is the best ecological solution for this site. How do we incorporate revenue streams within that we can generate these returns?
Fantastic. Thank you so much. I would like to turn to you, Dr. Jeffrey. So we've heard on a little bit already from Andy around innovative finance strategies. How does the Malaysia Forest Fund focus on this and the kind of interventions that you lead to support forest conservation?
Thank you, Laura. Malaysia Forest Fund actually is a federal agency under Malaysia Ministry of Natural Resources and Environmental Sustainability. Our primary mandate is to mobilize the financing that bolsters forest conservation efforts. Our first mandate is to develop and operate the Malaysia RED Plus Finance Framework, RFF, building upon RED Plus framework by the UNFCCC. So this framework serves as a guiding structure for our financial intervention in forest conservation, while observing the sustainability benchmark, as well as aligning with safeguards that protect our community and biodiversity. RFF is developed with two key financial instruments. The first one is the Forest Conservation Certificate, FCC, which operates as a non-market-based instrument. It focuses on certifying sustainable forest initiative while offering tax incentive and facilitate sustainability reporting for corporations that contributes financially to forest conservation efforts. This instrument not only encourages corporations to invest in conservation, but also rewards them for their contribution. And the second financial instrument under the RFF is the Forest Carbon Offset, FCO. Unlike the FCC, the FCO is a market-based instrument that leverages on existing framework that assign economic value to the preservation of forests. By monetizing the carbon sequestration and storage capabilities of forests, the FCO incentivizes private sector involvement in keeping the forest intact, akin to the carbon crediting mechanism. So both instruments are expected to play a crucial role in promoting private sector engagement in the forest conservation. They provide tangible benefits and incentives also for corporations to participate in conservation effort, which in turn helps mobilize private finance towards this initiative. So this approach is particularly significant strategies as it shifts the financial burden from being solely government funded to a model that involves public and private partnership and encourages corporate responsibility. While developing innovative finance strategies are part of our mandate, implementation and operationalization of these instruments, though through communication and capacity building, as well as coordinating between various stakeholders, are part and parcel of this endeavor. To elaborate, I would like to share a little about the Malaysian context. What may be unique for Malaysia is the fact that when it comes to land and forest-related matters, it is under the autonomous administration of the state governments, while the driving force in advancing nature-based solution comes from the private sector, entities, and financial institutions. motivated primarily by the shift in priority of the landscape towards sustainable development. So in developing financial instruments that are usable, practicability and market accepted, we have had extensive and close engagement with various stakeholders in Malaysia, including the federal and also the state government, entities in the private sectors, financial institutions, academia, and also the NGOs. Those follow us on social media would be aware that this extensive engagement has culminated in our FCC having been approved by the National R&D Plus Technical and also the steering committees for the operationalization, and the FCC will soon be launched for public use. So at the same time also, our FCC is undergoing a feasibility study to be used as a forestry-based domestic offsetting scheme. So this study is due to be completed in May 2024, which is a few short weeks away, and we will be finalized with one proposed initial methodology based on the market requirement. So this development should provide a clear insight into what Malaysia Forest Fund is about and embodies the mandate that MFF has been established, on which are in the context of forests and also forestry. Firstly, is to develop and implement innovative finance strategies, to develop associated guideline protocols and procedures to enable and operationalize forest initiative, to facilitate communication, awareness, and capacity building, and lastly, to verify and report on initiatives implemented. That's all. Thank you, Laura.
Thank you so much for giving us a glimpse into this really important work you're doing. And on the government, the role of the government, public-private partnership, I hope we can come back to this a little bit later as well. So Yogita, for these market-based mechanisms and innovative finance that Dato' Jeffrey and Andy already discussed, of course, we need a lot of data. And I wanted to start this question with you. What progress has actually been made from your perspective in ASEAN on these data challenges that financial institutions face when they're trying to assess and address nature-related risks and impacts?
Hello, everyone, and thanks, Laura, for the question. So perhaps I can start with a brief introduction about MSCI. And so we provide stock indexes, portfolio risk, and performance analytics tools to institutional investors, hedge funds, and all sorts of investors. And perhaps MSCI is best known for its stock indexes, which focus on different geographic areas and different stock types. They track the performance of those stocks and included in them and act as a base for the exchange traded funds. And I guess specifically where I sit, I come from sustainability and climate team, and we actually mostly do research that is focusing of how companies are managing climate and sustainability related opportunities and risks. And a lot of our clients that we see come to talk to us about how they can identify activities of the investee companies that are interested or comes in those indexes that could lead to nature, but basically loss, or for example, how to measure those negative impacts of the investee companies, or also to understand how those different nature-related risks can translate negatively into the company's financial performance as well. So we both look at the risk and the opportunity. And specifically when we talk about the data, we definitely see a positive progress in ASEAN as well. And I guess it could be attributed to some of the global biodiversity-related frameworks, such as TNFD, coming into force and providing some guidelines broader how investors and also the corporates can approach the topic of biodiversity. However, I guess like some of the challenges in that progress we're still seeing is that there are still perhaps first of all is because biodiversity is such a complex topic, right? So in terms of even terminology, understanding it, so there is still a lot of challenges related to that. And also I think also even for the more advanced investors, I guess sometimes it's even difficult to understand and know what tools are available, what factors are available, and where they can start. And I guess lastly, even what's also quite challenging still, even understanding, while we can understand certain risks at a portfolio level, but reaching that location-specific assessments is quite still challenging. And we talk about when we talk about the biodiversity, that location element is very important. So I think perhaps those would be those three high-level type of challenges that we are seeing, and that all of the progress that we have seen so far.
That's really helpful. Thanks, thanks a lot, Yogita. And I hope you can come back to TNFD and some of the specific metrics later on as well. So to deep dive a little bit on this aspect of actually scaling market mechanisms for nature-based solutions, I wondered, Satria and Andy, I'll put this question to both of you, but yeah, staying a little bit still at the high level, what, according to you and the the quite different stakeholders and that you represent, what are the key barriers to attracting more investment in nature positive projects? And yeah, if you could maybe actually also already highlight some of the ways these might be overcome, maybe starting with you, Satria, and then handing over to Andy.
Thank you. Well, the barriers are that there is little data available as to how these investments work out. There are very few case studies, very little understanding of. There's a lot of understanding of risks through the conventional lens, because all investment is about understanding risk, measuring risk, managing risk, and then getting returns. So everything is understood through the brown economy lens, where nature is invisible. So if nature were to be visible in that conversation, it will be the biggest risk we are talking about, and which we are not. To give you an example, something we did, it's almost 8-9 years now, back in 2016 in Indonesia. At that time, I was working pro bono, but with help from the UN Environment Program, with the help of the then head of UNEP, my good friend Akim Steiner, who contributed close to $500,000 to set up something called the Tropical Landscape Finance Facility, which I actualized and set up, working outside the UN system. And what did we do? We built a partnership between all stakeholders with the government, but the government not playing a money role or a regulatory role, but a more benevolent role, a facilitating role, with Pa Jokowi and Pa Luhut at that time, and they're still, it's the same government still there. And then partnering with BNP Paribas, World Agroforestry Center as the research partner. And we managed to, and with a bit of blending from USAID, and the asset manager was the ADM Capital out of Hong Kong, together, we managed to catalyze, and Michelin, of course, was the entrepreneurial partner, to protect a 400,000 hectare forest, which had already lost 22% of the land to poaching and illegal logging and everything else. And so Michelin comes and puts up this world's largest sustainable rubber plantation, 38,000 hectares, which was completely degraded. WWF International comes in and puts in a 50,000 hectare conservation area, bringing back the forest. That's the second ring of defense. It employs 50,000 people, 16,000 directly in the rubber plantation and 34,000 in the secondary and tertiary sectors of the economy without a single dollar of government money. And the first tranche money which we raised out of Singapore, $95 million, was at a cost below the sovereign borrowing cost of Indonesia, the country. And this was project finance on degraded land, and Michelin didn't want even recourse to its books. It was a miracle of sorts by building a narrative around Mother Nature and what it does to the Sumatran tiger, the orangutans, the pangolins, and the rainforest and everything else. And this is the most important part there. The bond, the first tranche was a 95 million bond, 15-year bond. But 5 years later, the project becomes so successful and cash flow positive that Michelin actually buys out their joint venture partner in Indonesia and takes the whole thing onto its books and retires the bond in 5 years, pays off everybody, because now it can actually get money at lower costs because there's a collateral of 38 million rubber trees. So, so there are very few examples like this, of course, but at the same time, these are very powerful examples of what happens when a diverse set of stakeholders come together with the right motivation, not about making 15, 20, 30% returns, but to focus on the forest. How do we bring back the forest? How do we prevent any further deforestation? And how do we make it all work? And then everybody actually ends up making money, not outsized returns, but reasonable returns as compared to the market. And it works, actually. So my take on the matter is that there's significant opportunities and possibilities waiting for us to tap into, provided we build these virtuous partnerships among all stakeholders, such as the ones in this conversation.
Great. Partnerships and bringing different stakeholders together, I think really does the trick, especially in the area of nature. Andy, is that a fair reflection of the main barrier and how to overcome it, or would you, what barriers do you face on a day-to-day basis?
Yes, so that's that was a fantastic case study. I think if I talk a little to when we are engaging with investors raising capital for these activities, for many of them, it's a new asset class, nature. So we've spent a lot of time at Federated Hermes and with our partners to try and to integrate how these systems, these ecological systems, how these natural capital activities like forestry, like peatland restoration, how they operate by utilizing that. There are professionals that exist in this space that have, they've been forestry people, they've been foresters for decades, they're very skilled, but trying to integrate that knowledge base into an institutional framework for how you, as you mentioned, how they assess risk and things like that. So trying to build it, because the knowledge and the risk understanding does exist. It's just trying to incorporate that into a form in which traditional investors will understand. And then, of course, there's also, there's a bit of a perceived uncertainty around revenue streams, because as we've got Yogita on the call, some investors like long-term track records so they can, look at a graph and see where things land. So there's a lot of time discussing, trying to educate where these markets have operated for decades in other places. Say it's a carbon market, and there's some compliance markets around the world. So there's a lot of that sort of education piece, and then also where there are other solutions like what we're doing with the UK Nature Impact Fund, is that we've created a public-private blended finance fund. So the UK government's Department for Environment, Food and Rural Affairs has seed funded. They've provided millions of pounds that will go into the fund to provide that market signal to private capital that you know, this is a space they want to focus on, and it also helps through some mechanisms de-risk the private capital, and on the basis that we will crowd in more private capital to work with this public money, but really scale it up and make it go further. And that's some of the areas that we are looking at in overcoming these barriers and trying to move things along with the finance sector.
Thank you. Yeah, that's really helpful. So I think, yeah, both of you have talked a lot about different stakeholders, and from my experience, bringing stakeholders together oftentimes really involves highlighting the benefits that preservation of nature and nature-based solutions can bring, and these can be quite different to different stakeholder groups. So Dr. Jeffrey, I wanted to follow up with a question with you specifically on forests. So we all know about the climate sequestration, the climate benefits of forest protection, but what other environmental or even socioeconomic benefits do you come across, and and how does this inform how you interact with different stakeholders? I think you're muted. Did the question make sense? Dr. Jeffrey? Can you hear as well?
Okay, thank you, Laura. Okay. From an environmental perspective, the nature-based solution offer a range of advantages that contribute to the ecosystem health, biodiversity conservation, and also the natural resource management. One of the key benefits is the restoration and enhancement of the ecosystem services. So these services, such as the water purification, soil fertility, and pollination, are essential for supporting human well-being and maintaining healthy ecosystems. So by implementing the nature-based solution like reforestation, wetland restoration, and sustainable land management practices, we can enhance these ecosystem services, leading to improved water quality, increase the soil productivity, and enhance the biodiversity. So nature-based solution plays a crucial role in climate adaptation and resilience. Natural ecosystems such as the mangroves, forests, and wetlands act as buffer against natural disasters like floods, storms, and also erosion. So they provide the natural infrastructure that absorbs and dissipates the impact of extreme weather events, reducing the vulnerability of communities and also the infrastructure. So investing in nature-based solution not only helps mitigate climate change, but also strengthen the resilience to its impacts, enhancing the overall climate adaptation strategies. So in addition to the environmental benefits, NBS also offers significant socio-economic advantages. One of the key benefits is the creation of green jobs and economic opportunities. NBS projects such as the sustainable agriculture, ecotourism, and green infrastructure development generate employment and income opportunities for local communities. So this not only contributes to poverty alleviation, but also promotes inclusive and also sustainable economic growth. Another socio-economic benefit of the nature-based solution is the promotion of social equity and community empowerment. Nature-based solution projects often involve local communities in decision making, planning and implementation processes. So by engaging communities as partners in conservation and restoration efforts, MBS empower marginalized groups, strengthen the social cohesion, and foster a sense of ownership and stewardship over natural resources. Thank you.
Thank you very much. That's really comprehensive and yes, always fascinating, I think, to just highlight the really multiple benefits, right, that investment into nature has. I'm mindful of time and want to make sure we have time for a closing round of questions. But before that, so just really deep diving on the role of financial institutions, Jurgita, from your experience, how can financial institutions, really drilling down more into the detail, how can they really incorporate their assessment of nature risks and decision making, really, and if you could share maybe even some of the specific metrics used, or touch on TNFD as one of the frameworks that we really have a lot of hope for facilitating this in the future.
Sure, thanks, Laura. I guess thanks, Dr. Jeffrey, for mentioning of some of the important aspects of the value of the nature that that is crucial, and I think I want to start there because I think for the investors to properly integrate nature risks into financial decision making, the investors, it's important to understand what are the systemic risks and what are the, I guess, stewardship opportunities that are available, or also like to adopt site-specific approaches, and then based on those to develop those transition plans of integration. So and it all boils down to probably a couple of things, and a little bit oversimplifying here, but essentially it's important to have this asset level data and understanding the kind of specifics of the location and the fragility of the nature. So and essentially nature related risks are often can be categorized as physical risks, or such risks bring a lot of complexity and can be difficult to predict. Therefore, I think for a lot of investors, the main challenge is to basically to understand and determine those risks so that they can bring back them to the portfolio. And I think such frameworks as TNFD with their LEAP approach sort of provide this initial guidance how the financial community can approach assessments of priorities and risks. In a sense, and in terms of talking about some of the tools available and data, I guess a first step could be something that we've seen in our practices, the screening or footprinting, in terms of understanding and measuring portfolios' negative impact on the nature, and basically, I guess to simplify, investors can start assessing their potential financing impacts by identifying companies or activities that could be considered key drivers for biodiversity loss. And I think some of the examples that we heard mentioning before, the palm oil companies and others, those identifying those type of activities or the companies that might have the biggest impact on the nature. And in terms of talking about, I guess, different tools and metrics available, we have like fraction of disappearing species and mass abundance of species, but they all measure different things, and sometimes it's difficult to derive meaningful assessments from using different tools available. So I guess although such models can differ significantly, they can be a starting point for the investors to start their journeys. And I guess perhaps we are at the stage where we have a lot of sort of data available, what we're using, we are relying heavily on artificial intelligence to make certain insights and use those as a proxies for assessments. But hopefully that's a starting point, and we can move that with that ahead.
I'm happy about the optimism. Time has flown by, and we're really almost out of time. So I want to ask all of the speakers again to reflect on maybe the one single biggest action that could help unlock finance for nature-based solutions. And I will, yes. Sorry, Satya, I'm going to put you on the spot first. You didn't have much time to think, but yes, that would
No,
be.
that's all right. I think what we need is we need to build virtuous partnerships that we talked about. I was just last week, I was in Singapore meeting almost everybody who mattered, including Piyush Gupta, the CEO of DBS Bank, the Economic Development Board, and a lot of other companies. And where we're trying to build a World Climate and Nature Guarantee Facility. We've signed a partnership agreement with Federated Hermes. I signed that with Sakir Nusibe, their CEO. We launched it together at COP28 on the 2nd of December, with the First Minister of Scotland being there, promising all help. We now have a law firm, McDermott, Will and Emery, who's providing us pro bono support to help develop the structures. And our ambition is to, in the next 15 years, to produce $100 billion in counter guarantees, first loss guarantees, concessional capital, to be able to orchestrate $1 trillion flowing into nature-based solutions. And I was quite impressed, honestly, with the insights shared by Dr. Jeffrey. So I'm going to reach out to you, Pa, to see how we can collaborate, because every country needs this help, and especially countries of the global south who have the natural resources, but not the economic resources to make the natural resources deliver in a sustainable way that is climate resilient and adaptation and mitigation positive, So that's what we're going to do, and that's the idea. And you need to find blended finance at scale to drive resources into areas where it really matters.
Fantastic. And we see the virtuous partnerships already taking off during this webinar, which is great. Maybe on that note, Dr. Jeffrey, would you like to give us your one action? Yes, short and concise, please. Sorry, because of time.
Okay, thank you, Laura. So I would like to echo the viewpoints of Satya just now. That thank you for your wonderful comments by my statement. So by collaborating across actors, sectors, and also disciplines, we can pool resources, share expertise, and co-create innovative solutions that address complex environmental challenges effectively. So furthermore, collaboration helps in managing uncertainty and risk by leveraging collective intelligence, diversifying the funding sources, and also building resilience to environmental shock and disruptions. So with that word, thank you so much, Laura, and all the panelists. Thank you so much.
Thank you. Andy, over to you. What's the single biggest action from your point of view?
Yes, so building on Satya and Dr. Jeffrey, I think it's slightly different, but I would say and encourage those with the capital, those investors, to get out there into the field, on the ground, in the places and communities where these nature-based solutions will be delivered. And I think, this is the best way to grow understanding, appreciation, feel a connection to the project, to the people, their investments, the stakeholders, and the real impacts that these can deliver on the ground. So yeah, get away from the desks and the computers and get out there into the nature to really build that connection. And that should, bring everyone closer together and see help galvanize that action as well, in my view. Yeah.
I think that's a really good one. Yeah. And Yogita, over to you for the final single biggest action.
I guess I can only echo to what my fellow panelists said. I think the partnership is a good way of approaching the problematics of this complex topic, but also getting on the ground is something that we also do. And perhaps the last thing I want to highlight, the importance of technology that could perhaps help to also connect all of us and also to address some of those still gaps that are related to biodiversity related assessments.
Yeah, we didn't have a chance to deep dive on technology, but absolutely agree. There's so much potential machine learning, AI, that could make this, especially the data challenges, a lot easier to process. Thank you so very much for all your contributions. Maybe just to take one final minute to summarize what I took away and heard and learned today. Which is, I think, very much the starting point. Nature will not keep giving. I think, Satya, that was a really important point to start on. I also took away that from all of your fantastic examples, financial returns and nature positive outcomes are certainly not impossible to combine. And we've heard some fantastic examples of your different organizations doing that every day. I've also heard some hopeful news around the development of frameworks, positive developments in the data space, and especially tools becoming increasingly available. We heard about TNFD and footprinting. Of course, we know there are a lot of challenges ahead, but I think I want to take away on a hopeful note that this should not keep every single organization from using these frameworks as a starting point already today, and don't let the perfect stand in the way of the good. Yes, and lastly, really to embrace partnerships. I think that was a key theme. We're all not alone. There are so many organizations out to partner up with and share knowledge and build capacity together. So on that note, thank you again, and all the best. Thank you for your attention.
Thank you.
Thank you.
Thanks, everyone. Have a great day.